Welcome to today's market report. European stock markets edged largely higher on Thursday, boosted by the final approval of the massive US COVID-19 stimulus package ahead of the European Central Bank's policy meeting. DAX in Germany traded flat, CAC 40 rose 0.1%, FTSE 100 climbed 0.2%. The US House of Representatives gave its final approval to the Biden administration's $1.9 trillion COVID-19 relief package on Wednesday, meaning one of the largest economic stimulus measures in the US history only needs the president's signature to become a reality. This stimulus deal is expected to give the US economy, the world's driver, a significant boost during the second half of the year. It's also expected to give a fresh boost to stocks, with surveys showing that a good chunk of the $1,400 checks being sent to households will find their way into financial markets. Attention in Europe now turns to the latest meeting of the ECB, with the central bank due to hand down its policy decision at 12:45 London time. The ECB will be pressed to clarify what it means by preserving favourable financing conditions and its thoughts about the recent increase in bond yields. Mere words were unlikely to stop long bond yields from rising further. The ECB did in fact quicken the pace of bond purchases 2 weeks ago as the volatility in bond markets took off, but that was marked by the fact that it also had big redemptions from a bond buying program from a decade ago. Nokia stock rose 1.3% after the Finnish telecom company signed a deal with Samsung to license patents covering its innovations in video standards. Rolls-Royce stock rose 2.1% after the aircraft engine maker stuck to its forecast that cash flow will turn positive in the second half of the year as travel picks up. However, its £4 billion loss in 2020 was wider than the company's own guidance. Generali stock rose 1.47%, continuing a string of post-pandemic highs after the Italian insurer posted a record operating profit for 2020 despite the impact of the COVID pandemic. Hugo Boss stock dropped 2.6% after the German fashion house reported a drop in currency-adjusted sales of 26% in the fourth quarter as its stores were again closed due to the pandemic. Oil prices rose on Thursday as the latest data from the Energy Information Administration showed that domestic gasoline supplies slid last week by almost 12 million barrels to the lowest in about 4 months, while demand rose to the highest since November. Gains were tempered by crude inventories rising by 13.8 million barrels. US crude futures traded 1.1% higher at $65.13 per barrel. Brent contract rose 1% to $68.58 per barrel. Gold futures rose 0.9% to $1,737.35 per ounce. On the FX front, the GBPUSD pair looks to be stabilizing above its 55-day moving average at 137.61, and the weakness stays seen as corrective prior to the core bull trend resuming towards the recent reaction high at 140.17, according to Credit Suisse. Commerzbank commented that we are beginning to wonder if the market is ready to resume its up move, and we're going to retry long positions in the 6-month uptrend is not encountered until 134.65. Immediate overhead resistance is offered at the 20-day MA at 139.45. Above here lies 140.18, last week's high, and it's God's 142.38, the recent high. The buying interest around the single currency euro remains well and sound and lifted euro-dollar to weekly tops around 119.70. The pair is up for the third session in a row on Thursday, on the back of the moderate leg lower in the greenback. In fact, diminishing US yields weighed on the buck and exposed it to further downside after February's inflation figures disappointed investors. On Wednesday, The pair gains extra pace as inflation fear look somewhat mitigated and market participants reshift their focus to the vaccine rollout, which keeps lagging in Europe, and hopes of a solid economic rebound in the second half of the year. In the domestic calendar, all the attention will be on the ECB interest rate decision, although consensus sees the central bank keeping the monetary conditions unchanged. However, traders are expected to closely follow Lagarde's press conference and any comment of the recent rebound in yields. The dollar index fell to its lowest in a week due to a mild risk-on tone in currency markets as attention turned to the ECB's policy meeting. The dollar index was down 0.2% at 91.606. This is today's market news. Thanks for listening. We'll see you next time.